morning, viewers, and welcome to another edition of the Market Review, where we bring you developments in the financial and capital market as it affects the economy. Today, we'll be looking at the global economic developments in 2021 and the implications for Nigeria's capital market. With me to lead this conversation is Mr. Johnson Chukwu, Group Managing Director, Cowry Asset Management, who joins us virtually. Good morning and nice to have you once again, Mr. Johnson Chukwu, and Happy New Year to you.
Happy New Year. Thank you for having me.
Yeah. This week will be very critical. Precisely 20th, which is tomorrow, the president-elect, currently Senator Joe Biden, will formally be inaugurated as the 46th president of the United States of America. U.S., as we all know, is the largest economy in the globe, and foreign policy, trade policy, and overall economic policy directions from the president of the U.S. has a huge impact on global markets, particularly frontier markets like Nigeria. What would you be looking out for? What are those things you see are likely shifts from the Biden administration that will, in a way, impact capital flows, which Nigeria has joined the rest of the world to race for in terms of liquidity in this period?
If you look at, there is a clear difference between a democratic government and a Republican government in America. In the first place, a Republican government is pro-business, imposes fewer taxes or reduces the tax burdens on corporate organizations, believes in or drives free market enterprises. Conversely, the Democratic Party, which Mr. Biden will be heading from 20th of January, will be more what we call pro-people or socialist-oriented economic policies. So we have already seen the president-elect come up with a $1.9 trillion
intervention stimulus plan to COVID-19 relief.
Yes, to fight the COVID-19 medical care, healthcare issues. And I believe that will be through vaccines. And like he has said repeatedly during his campaigns, he believes in science. So he's going to, unlike the outgoing president, Donald Trump, he's going to focus on what the scientists are telling him. But if in terms of economic policies, we should see possibly a rollback of the lower tax environment in the US, requiring corporate organizations to pay for the social support services of the government. We should expect increase in minimum wage, possibly an increase in minimum wage, and lowering of personal income taxes, an increase in corporate taxes. And the impact of this is that corporate organizations may decide to vote to invest outside the US, unlike what we had under the Democratic government of Donald Trump, where corporate organizations were pulling back from investment in other countries in the world and coming back to the US. So we may possibly see a reversal of that, where corporate organizations now move their investment, particularly direct investment to other countries of the world. If you have an increase in taxes, it also means that the US will not be the first point of call or the country of first choice for not just foreign investors, but also foreign portfolio investors. We've seen a lot of investment from China. We could see some of those investments looking for alternative markets to invest in. So ultimately, the developing countries like Nigeria may be a beneficiary of an economic policy in the US that is focused on the people more and less on corporate organizations. Like I said, we should expect lower personal income taxes, higher corporate taxes, higher level of financial support, or what they call social security support to the citizens, particularly at this period of economic and social crisis.
I mean, hearing that from you is a pointer to the fact that last year we had a very low FDI environment. We didn't even hit up to $2.5 billion, or let's say $2.5 to $3 billion in terms of FDIs. And FPIs, which were initially like the big thing, later declined in third quarter to other investments. So with what you're saying, that means that we may see some bright spots in terms of positioning ourselves as a country and in markets, capital market, to attract those key investments that can boost liquidity.
Yes, and if we go back to the issue of foreign direct investment in the country in 2020, We should also recognize that largely it was as a result of our own endogenous policy environment that made us to have such low level of capital inflow into the country. Other countries in Africa actually enjoyed far more capital inflow than Nigeria did, despite the fact that Nigeria is the largest economy in Africa. But we also have to look at what are the policies that we need to put in place that will attract foreign direct investments, that will attract foreign potential investment. I always say this, that before foreign direct investments will come, the short-term investors will first come and be comfortable in the environment before the guy who will come and put his money for 20 years or put in his money for an infinite time. So you must have a strong environment that attracts those who can come in and go out. And the policy environment in the country, one particularly the IFS policy, constrained inflow of foreign capital into the economy in 2020. I'm hoping that will be reversed in the current year and allow those who have investment in Africa, in Nigeria, to be able to exit whenever they want to. So that's very critical. So in spite of what could happen in the global economy, which country will benefit from flow of capital will depend on the policy environment of those countries. For us as a country, which can easily position this country or this economy as a destination for foreign investment. Particularly now we have adopted an African Continental Free Trade Agreement. And Nigeria is the biggest economy in Africa, accounts for more than 18% of the African population, close to 20% of the African population. And as it stands today, we are the largest domestic market in terms of potential in Africa, but in terms of effective demand, we are not the biggest in terms of effective demand. South Africa has a stronger effective demand than the market economy. So for me, as an economic person and as an economist, my approach would be put the right policy in place so that as capital flows out of the US into emerging market and frontier markets, Nigeria should be a trade destination for those capital.
Well, very, very, very nice to hear. And I guess the fiscal authorities will take note of this. Now, there is another race apart from liquidity. This is the race for vaccinations. Like we had our pre-discussions, even you as a business and market leader have taken all those precautions to ensure that there's remote working experience, which other organizations are taking very seriously. And even the optics for a very eventful and positive 2021 is also hinged on the vaccination levels across the globe. From US, we've seen efforts to roll out over 100 million doses of vaccines to reach out to Americans. In the UK, they're also looking at millions and millions of vaccines. China has rolled out, India, France, and even across the European Union nations. Nigeria is also working around this to take up its vaccine rollouts with partnership with countries like China and even pharmaceutical companies like Pfizer. But in a whole, how is this effective rollout going to impact the markets at the global and, of course, local level, that's in Nigeria?
In the first place, the rollout of vaccines is obviously what is giving many people, including you and I and the government, the confidence to leave the economy open, principally because everybody expects that in a couple of months, we should have a reasonable level of vaccination globally, not just in India, but globally. But if you look at Nigeria's situation, it's actually peculiar in the sense that the government is making provision about 100,000 vaccines or thereabouts, which is an inconsequential number compared to our population. You did mention the US 100 million to vaccinate 100 million vaccines. And that means that they want to vaccinate about 1/3 of their population at the first instance. And therefore, they will be focusing on those vulnerable, most vulnerable in society, the aged people, those who have some vulnerabilities, and then the people, the frontline medical workers. But with 100,000 vaccines, and as well, I've not seen the government take bold steps on how to address the issue of vaccine. The Minister of Finance just announced that there's no provision for vaccines in the budget. I think the government needs to make extra budgetary provision for vaccines. We need to focus on, at the minimum, 1/3 of the population, focus on those who are the most vulnerable, the aged people. We already see a lot of fatalities, unlike what we saw in the first wave of COVID-19 infection in 2020. We've seen almost everybody know one or two persons who have succumbed to the infection. So I think the government needs to be very aggressive in rolling out vaccines. If the government does that, I think the economy will be would likely see a single recovery. If you look at IMF projection, IMF is projecting about 1.1% of GDP growth for Nigeria in 2021. All these are predicated on some assumptions, and one of the assumptions is that the level of vaccination will improve, oil prices will recover. They are projecting an oil price of about $49 per barrel, higher than what we had last year.
Yeah.
And if you look at the global economy, I think some of the projections look realistic. The challenge would be, how do we deal with our local economy? Do we have the capacity to vaccinate as many people as possible? We need to move resources away from other sectors so that we can bring them to this healthcare sector, which is critical. Because if we don't fix the healthcare issue, every other thing will be difficult to actualize. Because if people are sick, they won't go to work, the level of productivity will decline, economic growth will decline, and the other factors will also not materialize. So for me, I think if we get the vaccination right, the economy should grow, and we should, at least the minimum, we should come out of the recession probably in the second quarter of this year. But if we are hoping that we will only rely on handouts from donors, those donors will first meet their local market environments. Country will first meet the critical needs of their citizens before they look at supporting other countries. So our government needs to be bold, needs to be courageous, needs to be aggressive in seeking for reliable vaccines. There are already a number of them that have been certified by medical bodies globally. You have the AstraZeneca, you have the Pfizer, and you have the Moderna vaccines. At least these ones, Pfizer is going global, and many countries have adopted it. We need to quickly look at how we vaccinate our own people to reduce the level of infection as well as reduce the level of fatality we're witnessing currently.
Yes, yes. I mean, what you really said, very critical, is the extra budgetary measures for vaccines. And this will also cover states. We had last week an engagement with the Lagos state government on their budget and also asked that question. I mean, can states even take the initiative of providing special budgetary provisions, COVID, in terms of how they can support the states in vaccine rollouts, because the federal government also has a huge responsibility, but states also should play a role. What is your thought on that?
Yes, clearly, the federal government has its own limitations. The government does not have all the wherewithal to roll out as many vaccines as was required nationally. So the state governments or the subnational government need to kick in. The subnational government are really complaining that the distribution plan for the 100,000 or so vaccines is not equitable. There are a couple of states that have financial muscle to support their citizens. Lagos State is one of them. A couple of states like River State should be able to kick in and order for those vaccines for their citizens. I do not think we should all rely on the federal government alone. I believe the subnationals should also know that for the economy to remain vibrant, particularly a state like Lagos that draws large portion of its revenue from taxes, it should know that if citizens are not working, the tax revenue is going to decline and the overall revenue will decline. So I believe that the state government should partner with the federal government in acquiring these vaccines and making sure that the citizens are inoculated.
Okay, that's very, very important. And let's move on to another issue, which of course you're very conversant with, which is Brexit. That was like a very good way to wrap the year. Mr. Boris Johnson, Prime Minister, wrapped up the signatories and the issues around Brexit. So UK and Europe are now on their own in terms of trade and investment issues. But for the Nigerian market, what does this mean as we move into 2021? You know that the Nigeria Stock Exchange has a very good partnership with the London Stock Exchange. And also, we have a huge diaspora, about 2 million in the UK. And yes, indeed, in terms of the capital importation reports, consistently, the UK for last year was a major investor in terms of Nigeria, looking at investments.
Okay, my take is that the UK will, from some time to come, remain the financial hub of Europe, despite the fact that it's now a distinct and separate market from the European zone. There are some cultural and linguistic advantages that United Kingdom has, which are difficult to replicate in any other European country. I know that countries like Netherlands, France, have been pushing to encourage financial institutions for the financial market to move to their country that want to serve the European Union. In as much as the European Union is a major economic bloc, I think for investors that are seeking for investments outside Europe and the US, that are looking for frontier markets, I believe the UK will still remain for the next couple of years their primary location. Why do I say this? That I refer to the issue of cultural and linguistic benefits or advantages that the UK has. English language is a commercial language of the world. So you realize that a lot of countries where you want to go and make investment, the language of communication is English language. England is a center of arbitration for most people that are going into cross-border economic business transactions. So this thing will take some time to change. And like you pointed out, United Kingdom or London has remained the primus, the source of the inflow of foreign direct investment in the country, particularly because of those two factors, and added to the fact that virtually all fund managers, all funders funds have some office, some form of head office or revenue office in London because of those cultural and linguistic benefits. So I think for us as a country, we should continue to cultivate our relation with the United Kingdom, while we should not be unmindful of the fact that some businesses may relocate to continental Europe, and that we also make sure that we as a nation establish such relationship with those countries. As it stands today, there are already some logistic challenges dealing with Europe. For instance, if you have to fly any of the Air France or Lufthansa, particularly Air France, they have stipulated you now need to get a transit visa if you're going to London. So unlike what you had before, so you're going to see some bottlenecks that will be created by the exit of UK. But most importantly, I must mention about that. The fact that this disengagement or separation between London or United Kingdom and the European Union was amicable is something to cheer, because the concerns we are that we're going to have a no-deal Brexit, we could create some level of economic turbulence within the European Union and obviously and among their trading partners. But good, the thing that has been resolved on the positive side.
Yeah, and now let's look at global monetary policies. I mean, the US Fed and the UK Bank of England, and of course the European Central Bank and Bank of Japan. These have been major central banks alongside our own CBN. In terms of their policies, how would this impact particularly FPIs, foreign portfolio investments, and capital inflows, which we've emphasized that we need to position ourselves? Like for the Fed, do you see more of accommodative, considering the need for relief? I mean, looking at the 1.9 trillion naira relief from President-elect Joe Biden, who will be sworn in now as president, do we expect to see an accommodative or dovish approach from the US and the UK, who both are really, really racing to stabilize their economies amidst the impact of COVID, alongside Europe and Japan? And what does that speak for Nigeria and the markets?
If you look at the policies of the central banks globally, the Bank of England, the Bank of Japan, the US Federal Reserve Bank, the European Central Bank, virtually all the central banks globally have adopted the accommodative monetary policies, probably to with intention to stimulate economic recovery and economic growth in the economies. We've seen, like you mentioned, the 1.9 trillion naira plan by Joe Biden to deal with the issue of COVID. With this, these factors are all injected in the accommodative monetary policies, and the intervention fund by the fiscal authorities in several countries are injecting within the global economy, and has led to a very low interest rate. In several countries, we have negative effective interest rate. We actually have below zero interest in some countries. So it's actually punishes you to keep your money than to lend it. So in a country like ours, the benefit ordinarily should be that these funds that are very cheap in European countries and Western countries, and including Eastern countries like China, should be looking for a destination where they will get some return higher than what they are getting in their domestic economies. Unfortunately, because of other constraining factors, other limiting factors, we are not benefiting as much as we should from this flow of capital. If you go to Western countries, the US, we have interest rate. Japan, I think Japan still has negative interest rate. Canada has near zero interest rates.
Low
And these
interest rate,
countries, investors are looking for actually because they can actually arbitrage by borrowing very cheap in their local economies and investing elsewhere, provided they have some conditionalities met. One of which is that the economies where they invest in must have stable exchange rates, and there must be liquidity in their forex market so they can exit whenever they want it to exit. So unfortunately, our economy have not made those two critical conditions. We do not have flexible exchange rates. We do not have liquidity in the FX market. And for those reasons, investors are not actually putting those global liquidity we are witnessing today into the Nigerian economy. For me, the key issue is what policy choices are we making that should attract foreign portfolio investment. I had mentioned earlier that you don't expect to see foreign direct investment inflow. Significant foreign direct investment will not have a strong market for foreign portfolio investors.
Now, Mr. Chukwu, let's go to the capital market for 2021, and quickly we'll take them. You can take them like one minute or 2 minutes each as we ramp up. For the equities market, of course, against all odds, they closed bullish 50 in terms of the percentage, 50.01% plus, and the over 40,000 points in terms of the index. This was not what was anticipated as at even half year 2020, but that happened. And thanks to what people described, or analysts described as the central bank's, part of central bank's efforts in accommodative policy, that low interest regime, which impacted the fixed income market, but more investors to the equities market. Do you see the CBN sustain this? Analysts feel they will sustain it in the first quarter of 2020. What are those other factors, apart from the mutualization, that will really shape the equities market?
Okay, let me start with the first part of the question. Is do I see the possibility of central bank sustaining that? I think central bank is going to relax it a bit. It might not be that they will allow the market to adjust fully to inflationary trend. Of course, we see the inflationary trend move to above 15% today, which means if you have to have effective positive interest return on the assets, you must have an interest rate that's at least 16%. So I do not see central bank moving to that extent, but I think they will loosen their hold on interest rate to some extent. And that could mean that there will be some level of reversal in flow of capital from equities to fixed income instruments. That's the first instance. So we may not see the level of rallies we saw last year. The second factor that could be an influencer to how the market will perform is our macroeconomic environment, the policy situations of the fiscal authorities. The third factor is our FX policy environment or FX environment. I had mentioned earlier that if you do not have a flexible exchange rate, if you do not have liquidity in the FX market, you will find it that attract foreign portfolio investors. So if you have foreign portfolio investors in the market, part of their funds will go into fixed income instrument, but a significant portion will go into equity instruments. These are factors that will shape the equity market in 2021. One, the FX policy environment. Two, the monetary policy that relates to interest rates. And three, the fiscal policies. The other factor, of course, the fiscal policy will influence the performance of the corporate organizations listed on the exchange. If the environment is such that we are seeing a GDP growth rate that is material, we should also reflect that. That should be reflected in the performance of the operating companies, which will drive investors to those companies' equity instruments. So these four factors will shape 2021. But on the balance, I do not expect that we should achieve, I do not expect another 50% capital gain or share index gain in 2021 as we saw in 2020.
And in looking at the fixed income and bonds market, we're seeing a lot of activities already. Lagos State government last week said they plan to leverage the debt capital market with about 100 billion naira to help finance their development projects in their budget. You know, Edo is also going to visit the market with this 25 billion naira bond. Then FMDQ just reported, that was last week, that it has kicked off 4 commercial papers for companies like Total Nigeria, like Mixta Real Estate, and 2 other companies on board. So we're already seeing some interesting developments in terms of commercial papers kicking off already in New Year? What other things do you think will really shape up in the fixed income and bonds market this year?
The critical thing will be the central bank policy that will shape the direction of the fixed income space. But as you know, at periods of low interest environment, investors would always want to play issuers, capital raising institutions who want to play long. So it's not strange that the likes of the Lagos state government wants to raise about 100 billion, because that's a wise thing to do, because you're going to lock in on a long-dated instrument at very low rates. And we all know that the current low interest rates is artificial in nature, because it's not supported by inflation rates, it's not supported by other economic fundamentals. So it makes sense for them to come to the market. So I should expect a lot of activities in the fixed income space, particularly at the primary market segment, and for those who are seeking for long-term debt instruments. You're already seeing a lot of disintermediation, which is the issue, which comes when you talk of commercial papers, which means that issuers want to borrow directly from the investors without going through the financial system or the banks. So that's what's going on now. That disintermediation is basically to drive down your cost, because there's a lot of liquidity available in the economy today, and we should see that continue until we see a reversal in central bank policies. But I think the wise thing to do for even those who are coming to the commercial paper market, if they have the financial capacity to go long term, that's what they should do, because it makes sense to lock in on long-term liabilities at a time when you have low interest rate, particularly if that contract is a fixed income instrument instead of a variable income instrument, or the tenor is long and the rate is going to be low. So that's my take when it comes to the fixed income space. We should expect activities at the long end of the market. Yes, you could also see some activities at the short end of the market, the commercial paper space, principally because the cost of this intermediation of going directly from the public is cheaper than going through the banks or any other financial institutions.
And just as we begin to ramp up now, the unlisted OTC securities is really also looking at some bullish plans, commercial papers, looking at also listing some key firms across the key sectors of the economy, and also even exploring the digital currency framework, the crowdfunding, digital platforms space. So what do you think will be the key things that will happen there, and also tie into the commodities market this year? By first quarter, we expect the Lagos Commodities and Futures Exchange to fully be operational.
As you know, the Secretary Exchange Commission has actually tentatively or in principle approved cryptocurrency. So I expect that development of that space to advance further in 2021. Crowdfunding has been impeached by the issue of trust in the economy. I want to believe that issuing houses like us will help to put some level of structures to allow for crowdfunding, principally because the major setback we have in crowdfunding is because of issue of misidentity, issue of trust and confidence within the Nigerian financial system, or within the Nigerian society, because not just the financial system. So some of those things will be addressed. A lot of Nigerians have actually embraced cryptocurrency as a form of investment. I want to believe that with SEC approving in principle that as an investment asset, we should expect a lot more activities to go into that. The mining process, I hope the Nigerians will also develop the competence to go into the mining process and also drive the value in that system.
And then looking at the commodities market, like I said, the LCFE taking effect, FX has been doing a lot in innovation and technology, and there are suggestions that we should have a partial privatization of the Nigerian Commodities Exchange, the one in Abuja. What are the one or two key things you see that should happen to really unlock more opportunities in the Commodities Exchange?
Well, you just mentioned the issue of privatization, and I think the government, if you look at even the budget, they say provision that a reasonable percentage of the government revenue will come from privatization process. As in terms of unlocking economic value, as you know, the demutualization process of the Nigerian Stock Exchange is likely going to be completed This year, we've seen appointment of 3 managing directors, with those Konyama as the group managing director of Nigerian Exchange PLC, Nigerian Exchange Group PLC. And we've seen 2 of the other subsidiaries, Nigerian Exchange Limited and Nigerian Exchange Regulation Limited, also having their MDs appointed. So we are seeing a demutualization of the Nigerian Exchange, which should actually open up the Nigerian capital market to a lot more investors. The commodities exchange in Abuja, we also expect that a lot more attention will focus on that. But to develop the commodity exchange, a lot of things also have to be put in place, including the issue of standardization. A lot of the commodities that are traded on the exchange have to be standardized. Unfortunately, we don't have such standard platforms here that could ensure that one tuber of yam is same tuber of yam anywhere, or same size or way of measuring that. Your cocoa is properly measured the way it's measured in Ivory Coast or in Ghana. So, but I think a lot more attention will go into this thing, because these are the ways we're going to unlock economic value within the system.
Thank you very much, Mr. Johnson Chukwu. I mean, very clear from you that this year we need to position a macroeconomic policy framework, fiscal wise, to ensure that we can attract more capital flows and investments. We also need to look at our forex policy, central bank, liberal foreign exchange policy, one that drives in more liquidity and investments and can attract FPIs. Also the need for a very robust market approach, innovation, like you rightly said, the need for even the equities market to watch 3 trends, which is the fiscal, that's macroeconomic policy, then of course the impact from the monetary policy, interest rates, and of course the FX policy. So a lot to look out for, even as you talked about commercial papers, that companies are coming there in the fixed income and bonds market should look at it at the long term, because it's a good way to deepen and diversify the activities and expand operations. And finally, for the commodities market, standardization is very key. So a lot to look out for in the year 2021. Thank you very much, Mr. Johnson Chukwu, for the time. I mean, it's very nice to hear your thoughts, and hopefully the vaccinations, like you said, we can get it right so that the markets can fully reopen and people can really once again engage as they do. But for this period, we want you to stay safe, as you've said you're doing with your team, and all the best in the year 2021.
My pleasure.
Yes, thank you. And that'll be all for today's edition on the market review. We had Mr. Johnson Chukwu, Group Managing Director, Cowry Asset Management, speaking on the global economic developments in 2021 and implications for Nigerian capital market. You can join our website, www.prochange.com, to watch our videos and news stories and reports, particularly on the markets, and also follow us at The Analyst NG and at Web TV NG for further updates on the market. Don't forget that in this period, we advise Nigerians to be careful of investment platforms that reach out to you with over 100 or 200% returns and not registered or regulated by the Securities and Exchange Commission, because we want you to have your funds invested in very credible platforms that are regulated by the Commission. Till we come your way again, thank you for watching. Have a nice day and stay safe.